Welcome to the today's question. Then let's test your understanding in management accounting. This is your today's question. So pause the video, try the question, get the answer, post your answer in the comment. Then resume the video and check the answer that you got is correct or not. A company uses standard absorption costing to value its inventory. So the company is using absorption costing to value its inventory. Its fixed overhead absorption rate is $12 per labor hour. So they are absorbing the fixed overhead at the rate of $12 per labor hour. And each unit of production should take 4 hours. So to produce one unit, it is taking 4 hours. Then we'll see for one unit how much fixed overhead that you are absorbing. So for 1 hour, fixed overhead cost is $12 that you are absorbing per unit. So this is $12 per 1 hour. To produce one unit, you need 4 hours. Then per unit, how much fixed overhead that you are absorbing? It is $48. So this is the fixed overhead per unit. And next, in a recent period where there was no opening inventory. So they are telling in the question, opening inventory of the finished good, it is 0. Opening inventory, let me write it down. Opening inventory 0 units. 0 units. 20,000 units were produced using 100,000 labor hours. 18,000 units were sold. So what you have to understand, this company produced 20,000 units. Okay. Out of that, they are selling how many units? 18,000 units. Then what you have to understand, if they produce 20,000 units and if they sell 18,000 units, end of the period, how many units will be there? 2,000 units will be there. So closing inventory, how many units are there? 2,000 units are there. The actual profit was 464,000. What profit would have been earned under the standard marginal costing system? So to calculate this answer, you can use this particular formula. Using this formula, you can find out any absorption costing profit if they have given the marginal costing profits. If you want, you can find out the marginal costing profits if they have given the absorption costing profits. So here they have given the profits 464,000 and the company is using absorption costing technique. So this is actually a simple way, a shortcut way of getting the answer. So the formula that you can use, absorption costing profits equals marginal costing profits plus OAR per unit. OAR per unit, if not fixed overhead absorption rate per unit, into closing inventory units minus the opening inventory units. So if you can memorize this formula, it's really good. So let's try to get the answer. We have to find the marginal costing profits. So they have given the absorption costing profits. Since the company is using the absorption costing technique, the profit is how much? 464,000. We have to find the marginal costing profits and fixed overhead rate per unit. We calculated fixed overhead rate per hour is $12. Likewise, one unit needs 4 hours. So for one unit, fixed overhead rate is how much? $48. Into closing inventory, how many units are there? 2,000 units are there. Why is that? You produced 20,000, out of that you sold 18,000. So 2,000 units will be there in the closing inventory, and they are saying there are no opening inventory. Opening inventory 0 units. So let's simplify the answer. 464,000 equals MCP plus, so 2,000 minus 0, 2,000. So 48 into 2,000, you are getting a value of 96,000. 96,000. So if you take plus 96,000 other side, 464,000 minus 96,000, it is your marginal costing profits. So your marginal costing profits will be how much? 464,000 minus 96,000. We are getting a value of $368,000. So your answer would be the first option. Now you can click the pointed video to try more questions.